Our Singapore exports continue to shrink, registering a double-digit decline in November as a global economic slowdown pinches demand. That's the second monthly contraction that snapped a nearly two-year march to growth. Also, analysts expect demand to gradually improve heading into next year. Official data shows non-oil domestic exports fell 14.6% on year, double the loss projected in estimates. It comes off a high base from a year ago. Exports contracted 9.2% on month, following a 4.2% decrease in October. Non-electronic shipments dropped nearly 13% following October's 5.1% decrease. This was driven by a decline in non-monetary gold, pharmaceuticals, and primary chemicals. Electronics also sank by more than 20%. Integrated circuits, disc media products, and parts of personal computers led the plunge. Now, exports to the top 10 markets as a whole dropped last month, dragged down by a decrease in shipments to China, Hong Kong, and Malaysia. Still, one analyst expects Nodex to be back in positive territory next year.
I believe that the downside risk to Nodex growth in the near term is from the US and Europe, owing to the fact that interest rates have increased quite significantly. I think this may continue to dampen on the consumer spending in the US and Eurozone. This includes that of China and the ASEAN region. I think for now, China's growth is fairly weak, but as the progressive measures from fiscal as well as the COVID-0 is progressively removed, I think that should help to support the economy.